Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on nickel exploration and development today. We will hear from Mark Selby, Chairman and CEO of Canada Nickel Company. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Canada Nickel Company webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the company's corporate presentation that can be found on the company's website, canadanickel.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Canada Nickel. Before we pass the baton to Mark, I'll start off with a few comments about nickel. Nickel has long been an important component in stainless steel, and the steel industry is obviously still the largest consumer, but nickel has a rapidly growing market for batteries used in electric vehicles. Much like many commonly used metals, much of the low-hanging fruits or high-grade near-surface deposits have been mined out. And we will likely find ourselves turning to deeper, lower grade, or more metallurgically challenging projects to provide for future demand. A quality project in a politically and mining friendly area is of great value. So with that said, we have Canada Nickel presenting today. Canada Nickel's flagship is its large Crawford project located in the Timmins area of Ontario, one of the largest undeveloped nickel deposits globally, and it's in a friendly jurisdiction right close to home. In addition, the company has acquired a portfolio of exploration targets throughout the Timmins area. With that, I now turn it over to Mark to update our audience on the company.
Thanks, Tim. Thanks for that excellent introduction. I'll flip ahead here to slide 3. Yeah, it's been a year since we've done one of these webinars to a broad audience. So I'll talk about a lot of what's new. Fundamentally, as Tim highlighted, nickel is about to go through one of its super cycles as we get this large new source of demand from the electric vehicle market. One of the things that's very important to note is that, the US and Europe, after being flat in nickel consumption for the last couple decades, are both going to have to boost their nickel consumption significantly as car makers want to have battery production, in the same continent in which they're producing the cars. The Biden Inflation Reduction Act mandated minimum content requirements from free trade agreement countries, which is a huge bonus for nickel deposits in Canada because the battery makers, which are a large component of the overall cost of a car, will need to be sourced with nickel that comes from a free trade agreement country. And some of those deadlines, content levels are quite high, and timeframes, you're looking at like 70% free trade agreement content by 2027. And so with the battery makers in Asia that we've been talking to, that's created a whole new level of urgency. They were already pretty urgent, and they're even more urgent in terms of locking down raw material supply in these markets. In the past year, we've been very busy. So we put out an updated mineral resource in June, where we doubled the measured and indicated resource to 1.4 billion tons. There's another almost 700 million tons of inferred resource, so over 5 million tons of contained nickel. That makes it the 5th largest nickel sulfide resource globally. We are on track to complete a feasibility study by year end. We're in the release we just put out, about 85% complete, and looking forward to seeing those results. And again, we're quite confident in terms of what those results are going to look like, which is underpinning the reason we went and did another bridge loan with Ormet. We did one last year to be able to bridge us over to the completion of the feasibility study. So that way we can get some work done this winter, which is better done when the ground is frozen in December, January, and February. One of the the two really big breakthroughs that goes well above just the Crawford project that we've done is number one, a breakthrough in terms of carbon, being able to capture CO2 with the waste rock and tailings of our project. This is something that distinguishes this entire class of deposits. There are a handful of other companies that have similar deposits, but all of those companies have traditionally looked at tailings after they've been deposited in a tailings facility. We were working with injecting CO2 into the stream of material as it passes through the process mill. And we were quite pleased to find out that basically, if you take our tailings as they come out of the flotation circuits, you juice them with carbon for a brief period of time, and you let them sit with the water intact, we can get to net zero carbon within 36 hours. And we can generate 21 tons net carbon credits per ton of nickel that we can produce in just 6 days of leaving the CO2 enhanced water for 6 days to be able to get to that level of carbon credits. When we're fully ramped up, we're looking at nearly 1 million tons of carbon credits per year. In terms of what market prices are looking like longer out, you're looking at almost, 100. The Canadian carbon price in 2030 will be $170 a ton. So this is a very, very substantial benefit. And we think there's a pile of levers that we can pull to be able to make that process happen even faster and potentially capture even more carbon within that time frame. So very, very excited on that front. One of the other big milestones for this year was to kick off the permitting process, which we did in July. That sets the clock running with the federal government and provincial government. And we're looking to be having permits in place by mid-2025 and be in production by the second half of 2027. The other big stream of announcements, and you would have seen a series of releases culminating with the release that we put out last week, where we put together, based on a geophysical approach in terms of identifying these types of deposits, where we identified over 20 targets. We have 42 square kilometers of very prospective footprint. And again, to give you an idea, in about just over 1.5 kilometers of footprint, we've delineated 5 million tons of nickel at Crawford. We released our drilling from 16 holes, where we've delineated a footprint that is already 90% of what we have at Crawford, and our target at Reed is actually larger, significantly larger than what we have at Crawford. So, we are quite confident that, not only are we going to have a very large resource at Reed at some point in the future, but because of the success rate that we're having using targeting our drilling, using that geophysical approach, that the other 42 square kilometers will be pretty prospective, and as a result, we're really talking about building one of the world's largest nickel sulfide districts, potentially larger than Sudbury, potentially a multiple of Sudbury, at a point in time where the market is desperate for large scale, scalable, low carbon sources of nickel to be able to have nickel for the electric vehicles that everybody would like to produce over the next few months. In terms of, I'll just focus on sort of what's new. Again, in terms of battery forecasts, I've had this forecast since for 3 years, and now you're seeing a lot of forecasters get to this kind of nickel consumption in the battery market, and potentially even higher, given the fact that the adoption rate of electric vehicles is well ahead of what most people had expectations wise just a few years ago. So, we really do need to double supply versus where we were in 2020. And again, consumers, the auto industry is not going to depend on Chinese controlled supply that's high carbon, has a high carbon and other environmental footprints from Indonesia. Again, just briefly, for those of you who might be new to the story, the big benefits of this project are, one, its location. We're in a 100-year-old mining camp in Timmins. We're located in close proximity to significant infrastructure, road, rail, highway. You've got 80,000 people who can drive to site. Based on the PEA, we had very robust outcome. We would be in the first quartile of the cash cost curve. We'd be in the lowest decile of the carbon curve. And again, this number here does not include any of the benefits of waste rock and tailings, the carbon captured by that. And again, we believe we'll get to effectively minus 20 on this same kind of chart going forward. In terms of scale of resource, already based on the drilling we've done in just 3 years, we are the 5th largest nickel sulfide resource globally. And again, by the time we get to the feasibility study, wouldn't be surprised to see us maybe climb up another notch or two in these overall rankings. We would be the 5th largest nickel sulfide operation if we were fully ramped up today. So again, the kind of scale asset that the majors will ultimately want to own. The majors have made it very clear that the BHP particularly, they want to get larger in nickel, copper, and potash. So a project like Crawford is right up the kind of asset that the majors would like. In terms of base metal assets, we'd be one of the largest base metal mines in Canada, again, of the scale that the majors are looking for. In the feasibility study, which will be out here in a few months, we're baking in a number of improvements, and we've had a series of releases over the past 15 months as we progress the feasibility study, that's highlighted some of the potential, that we think is coming through. Again, in terms of the resource, we're looking for anywhere from a 50 to 100% increase of the resource in the mine plan. So targeting somewhere in the range of 1.5 to 1.8 million tons of resource. 1.5 to 1.8 billion tons of resource that'll be in the mine plan. That'll be utilized in the feasibility study. We've made some tweaks to the flow sheet, which have delivered some significant recovery improvements. And again, in terms of the carbonation approach, I cannot underscore enough how valuable, the property that our tailings and waste rock like to spontaneously absorb CO2. This is a chart. This picture here on the right shows, you can see, the before when the core comes out of the ground, and then within a year it has this white coating on it, which is a mineral called magnesite, which is a magnesium carbonate mineral, which again spontaneously forms as that rock reaches out to the atmosphere, grabs a CO2 molecule, and permanently sequesters that carbon in a mineral called magnesite. These are the comparisons of the new tests, just how quickly it carbonated, picked up carbon versus the more passive approaches, which are typical. And so again, we think this is a very, very big breakthrough in terms of being able to capture carbon globally. In terms of concentrate grades, again, the benefits of these ultramafic deposits is that they're made up of minerals which have a much higher nickel tenor than your typical nickel mineral. We have hazelwoodite and aurorite, which are 72% nickel content, which allows us to produce a higher grade concentrate. From the beginning, we've had a very good working relationship with all the local First Nations groups. At Dumont, we signed when I was involved with RNC Minerals, we developed the very first impact benefits agreement with an Algonquin First Nations group in Quebec, and again a focus on First Nations and community relationships. Has been a big focus all the way through. I think it's a big kudos to our team in that we, the federal government, through their first set of hearings, had scheduled 3 hearings. They ended up canceling the 3rd hearing because nobody showed up. So, in terms of community support, we've done the work to get a very broad base of support in Timmins. And again, Timmins is a very, very mining friendly location. In terms of the resource potential, so the diagram here on the bottom is the footprint, the geophysical footprint that we were targeting at Crawford. The pink areas are the ones that were serpentinized enough, have enough magnetite in them, that we think also contain significant amounts of recoverable nickel. You can see in the Reed deposit in the image to the top here, just how much larger that footprint is. And again, this resource outline that you see over the geophysical footprint, that's 5 million tons of contained nickel across all categories, with a 1.5 square kilometer target footprint that's attractive. Again, we've already drilled off a footprint that's 90% of what we have at Crawford, the first drill hole that we have a complete set of assays on, was exactly the kind of grades that we were looking for over the entire length of the hole, with a higher grade interval in that deposit. And we've had a number of higher grade intervals show up in drill holes, not higher grade, sorry, higher mineralization. We don't have the assays back yet, but we're confident that they'll have, a higher, looking like a higher grade core, similar to what we had at the main zone and the east zone. The key thing here is the more drilling that we do based on this geophysical targeting and that success rate that we've had, increases the probability that the other 20 targets we have, with the 42 square kilometers of attractive geophysical footprint, is going to translate into a nickel resource. So again, we believe that there was a nickel district here. This kind of work is really going to, demonstrate the kind of basically, outline what we think is going to be one of the world's largest nickel sulfide districts. In terms of, the entire land package here. So I just showed you the footprint of Reed, which is about 16 kilometers away from Crawford. There's already successful drilling at Bannockburn, where we acquired that from Grid Metals. And again, from some of the historic drilling that's been done on some of these properties, in addition to the geophysical targeting that's there, we're quite confident that this land package here is going to yield another half dozen or so Crawfords going forward. These here basically are some of the, we call them uncoveries, because the drilling results that were there, are kind of the drilling results that we would expect to see today, but they were done 20, 30, 40, 50 years ago at a point in time where those kinds of grades didn't make sense, given the scale of open pit mining equipment and processing equipment that was available at that time. But in today's market and today's price environment, we believe very attractive targets to go after. Now, so again, some of you might say, okay, how can you be talking about a nickel district at that point in time? But the key thing to remember geologically is, to make a nickel deposit, you need a rip in the Earth's crust to allow material to move up from the mantle. Those rips don't, sometimes they're small one-off bits, but more often they're very, very large structures where you have multiple deposits attached to it. So as a result, most of the world's nickel resources come from a handful of districts: Indonesia, Philippines, Siberia, Northern China, Sudbury, Thompson, Western Australia, and just a few other places. We think, again, what we have in Timmins is the same age of rock as what's there in Western Australia. And again, we think the environment was right for a number of these deposits to form. Most importantly, again, these ultramafics are large scale. Yes, they're low grade. Yes, the recovery is low, but the math works at the scale that we're mining them. And, the market is desperate for large scale sources of nickel that can be scaled up even further as the EV market continues to grow. And most importantly, in a place like Ontario, where we have access to low carbon electricity, where we have rocks that spontaneously absorb carbon, we can deliver that nickel, with a very, very low carbon footprint. Some of the majors have already been pretty interested in nickel sulfide resources. Basically, any nickel sulfide resource that wasn't owned by a major, that's been around for more than a decade or so, has been acquired by somebody higher up the food chain. We had a massive bidding war for Noront earlier this year. What's not on here yet, because it's not a completed transaction, is BHP Billiton has made a bid for Oz Minerals, which has two main projects. One is the Prominent Hill copper mine that's been operating for about 15 years now. And the second one is the Nebo Babel nickel copper deposit that BHP actually discovered BHP's one of the companies they acquired 20 years ago discovered this deposit literally in the middle of Australia, close to nowhere. That's 0.3% nickel and 0.3% copper. And BHP is paying $6 billion, I think offering $6 to $7 billion for that company, and effectively paying more than 10x for a deposit that they sold for a fraction of that a decade ago. So, again, with the majors getting their hands on pretty much everything that's been around for a decade, in the next 12 to 24 months, they're going to turn to, quote, the new deposits. And, we're obviously one of those new deposits that are out there, and we expect to get some pretty significant interest from the majors as we move forward. In terms of scale of deposit that we have, you have only gotten one or two good sulfide discoveries per decade. They tend to trade out at pretty premium valuations. Most of Lionor's mineral inventory was fairly low-grade projects in Southern Africa at that time. And again, they went out at a pretty large premium, at a production rate that would be pretty close to what we'll likely end up processing in our first phases of the mine plan. So again, through this year, we've continued to deliver on our milestones. This was the list that we had at the beginning of the year. So we did a financing in early March. We raised $53 million. We completed a resource update in the end of June. We've kicked off our permitting process. We're on track to deliver the feasibility study by year end. And, we're advancing the district exploration plan. I've had tremendous success on that front. And we continue in very constructive dialogues with the First Nations agreements going forward. So with that, I'll be glad to answer any questions that anybody has.
Great. Thank you very much, Mark, for a very informative presentation. We will now start the Q&A portion of the webinar. Reminder to everyone on the line that you can type your questions into the chat box at any time. And we already do have several questions. Maybe I'll start it off here with a question about drilling here. How many drill holes are currently being drilled, and I guess specifically maybe at some of the other exploration projects?
Yeah, so we've got 2 rigs going right now. So we've been scaling down through the fall as we focus more on the feasibility study and the infill drilling at Crawford comes to an end. So we've got we'll have 1 rig continue on doing some additional work around Crawford and 1 rig doing regional exploration. Once we get through the next round of financing, we might look at ramping that up. But our key focus right now on those regional plays is just to define the footprint that's there so that it's very clear if we end up in an auction scenario where we have multiple bidders that, it's that exploration potential that takes, the valuations that company typically pay, on a good project with no big potential, you get paid 0.8 to 1 times NAV in a competitive bidding scenario. In an auction scenario where you have a lot of exploration potential, you can see that value go to 1.2 to 1.5 times NAV. And again, we saw that very clearly with Noront going, the Noront bidding that happened during the past year. And when looking at the geology, at the nature of mineralization here, nickel sulfide deposits often have massive sulfide lenses within them. Do you see any of that at Crawford or the other deposits? And if so, or can you tell us kind of the nature of what the sulfides look like in the core from these projects? Yeah, so generally most of what we're looking at is generally disseminated nickel sulfides. Again, high grade in these deposits would be 0.4 to 0.5. We've had the odd interval up to 0.6 or 0.7, but generally, with the bulk of the resource being 0.2 to 0.3. That being said, when you have that much nickel in place, if you have other things that happen that are able to mobilize some of that nickel and have it concentrated somewhere else, you can get higher grade deposits around it. So at our Southman project that we acquired from Glencore, there's a historical resource of a few 100,000 tons at close to 2% nickel. So there's a small high grade set of lenses that are in close proximity to the major low grade deposit. And so one of the reasons we're keen to pick that one up is because of because of that relationship, and to see whether that relationship shows up at any of other properties that we can apply that model to. So the Bannockburn project that we picked up from Grid Metals, in addition to the large lower grade ultramafic that's there, there's a number of high grade showings at surface, that have showed up over time. So, and if you look, the footprint for this is Western Australia. And in amongst the the three largest sulfide resources in Australia are Mount Keith, Honeymoon Well, and Yakabindi. And Mount Keith's been operating as a mine now for almost 30 years. Nearby those large low-grade deposits are a bunch of high-grade deposits like Perseverance and other ones. So, we're not specifically targeting them now. We've got a massive footprint, that remains, that is relatively untapped. And so I think as we go forward, I wouldn't be surprised to see more higher grade deposits show up.
Great. And, kind of comparing, as you have to other deposits, we had several questions about, how does this compare to other deposits in Canada, for example, in the Sudbury area or Voisey's Bay?
Yeah. So, the key, historically in Canada and generally, up till, Mount Keith was the breakthrough with these kind of large lower grade deposits. The copper industry, has been mining low grade deposits because there, simply aren't large scale, high grade copper deposits left outside of the Congo, other than what Mr. Friedland is mining at Kamoa-Kakula. What we've been mining is generally, higher grade nickel underground in places like Sudbury and Timmins. And again, I was head of strategy at Inco for a few years, was there to, part of the team that tried to merge Inco and Falconbridge together. So, the economics of what those deposits look like versus the economics of what we're trying to do there. Yes, higher grade is sexy. I wish I could, walk around with, core, and I saw some beautiful rock come out of mines like Creighton and McCready. But I can tell you, those are, even with those grades, those are economically challenging mines because, your cost per mining, we're looking at mining at $2 a ton and processing it, for about $5 a ton. In Sudbury, you're looking at hundreds of dollars per ton to mine some of that material. The milling cost is not $5 because the mill is a fraction of the size of the kind of mill that we're going to be operating there. And then you have a huge amount of underground development, to not only get to the next new deposit, but then to continue to mine that deposit going forward. And so when you look at the amount of capital that you need per ton of nickel that you're extracting, it's relatively high. So, the sad reality in Canada is, production at Inco Sudbury has, fallen dramatically since Vale took it over in 2007. Production at Thompson is 75% lower than where it was in 2007. Again, I think everyone has their views on Vale as a mine operator, but if there was screaming economics there to be able to make money, at building those deposits, they would be doing it. But the people get caught up in high grade and really forget it's about the economics. We're going to mine rock for $8 to $9 a ton. It'll start out at $30 a ton of value and be life of mine around $20 a ton. If you can have a 60% operating margin business for 40 years, which is what we have, that's a very profitable, high free cash flow business that the majors will ultimately want to own. And those are the kind of businesses that they own in copper and the other bulk materials that they mine today.
Great. Now we did have a few questions here, or one question here on metallurgy. When you were with Dumont, wasn't there a bulk sample processed, and did it show that low-grade nickel is recoverable through that sample?
Yeah, so we did at Dumont, we had one area that was an outcrop. We pulled out 300 tons of material because we needed to produce about 3 tons of concentrate that we were going to use to demonstrate and improve up our roasting process to take that, be able to take that nickel down a different processing path than the traditional smelting route. And so, we processed that 300 tons. I think the average concentrate grade was, between 35 and 45% nickel during that phase. And so, it went very, very well. And, again, produce the kind of high quality concentrate that, we're expect to get from these kind of concentrates at the kind of recoveries that we were expecting to get given the grade of the concentrate that we're pulling off.
Great. And would you look to do, you have been doing some other types of innovative metallurgical tests on samples from Crawford, but would you look to do a similar kind of bulk sample, or what's the plan on that side of things?
Yeah, I mean, we're doing a 30-ton pilot right now. We're most of the way through it. It's gone very well once it's all done. We'll give people the results once it's all done, but very, very happy in terms of where the nickel concentrates come out, and then also the magnetite chrome concentrates that we're planning to produce, which will be a feed into the stainless steel industry.
Great. And we did have a couple of questions about kind of the timing of things and project moving forward here, but one, are there any updates? You had mentioned the stainless steel. Any updates that you can provide on a prospective stainless steel plants in and around the region?
Yeah, so the plan would be to process that material locally. Timmins is not only mining friendly, but mineral processing friendly. And so we're working with one of the leading stainless alloy steel consultants in Europe to identify potential partners. I was at a global stainless steel conference in Hamburg, Germany, 2 weeks ago, and those meetings met with several groups that were interested. There's a U.S. stainless conference the week after next, and we've got another series of meetings lined up there. So, again, people are keen to get a low carbon feed. People are keen to get a new source of iron, chrome, and nickel that can be used to build, because the stainless steel markets in US and Europe have much higher pricing than what you see in Asia. And in a few years, the EU will be having it's called the Carbon Border Adjustment Mechanism, and so they'll be slapping carbon taxes on inputs that have higher carbon content than what's being targeted, as a particular carbon content for that mineral. And so, the ability to provide a low carbon feed to these industries is very attractive. And again, a place like Timmins, where you have access to low carbon electricity, good access to the U.S. market, is pretty attractive for some of these stainless steel companies.
Great. Now we had a few questions here about you'd recently announced a loan agreement with Oramet. And can you tell us a little about what the plan is there? What's the motivation for taking that on? And is there, we did have a few questions. We know you can't talk much about potential strategic investors and that kind of thing, but is there something along those lines that may be imminent?
Yeah, so in terms of the Oramet loan, again, we're quite confident based on where we are. The feasibility study is going to land in a very good place. And so once you're done the feasibility study, it doesn't stop there if you're actually going to build a project. So, there's a bunch of work that is needed to be done to support the permitting process. And there's also work that, goes into, kick off the detailed engineering process. And some of that field work is best to do in the wintertime when the ground is frozen. Otherwise, you either have to wait an entire year or spend a lot more money to try and get it done when the ground is a lot soggier. So having that additional money in the bank gives us confidence to be able to commit to getting work done during the December, January, February timeframe. And again, we are in discussions with a whole range of different groups that are going quite well. And again, we wouldn't have chosen such a short fuse, if we didn't think there was a high degree of confidence that we were going to be able to close something in that time frame. Worst case scenario, we can extend that facility, by an extra 3 months, by paying an extra couple percent as a fee and some additional warrants. And so, again, hoping that we won't have to do that based on the conversations that we're having. And so, fingers crossed, we'll try and get something over the line by year end.
Great. And looking further at kind of ultimately, if you bring this into production, what would be, first of all, I guess the timeline potentially, obviously with the feasibility study, but permits pending and all of that, what would ideally the timeline look like to start construction and ultimately production? Yeah,
so right now, what we're looking at is with the permitting process kicked off in July of this past year. We are looking for 3 years for the federal permits and then 2 years within that time frame for the provincial permit. So we're targeting permits to be in hand, by mid 2025, and then with a just over 2-year build, we would be in production in the second half of 2027.
Okay. And looking at then the potential for financing that, obviously, if you do have a strategic investor or different options, but what would you look for to ultimately finance construction of the project?
Yeah, so the key there is, again, in my past life with our Dumont project, we work with Rothschild fairly extensively, and we'll be getting a project debt finance advisor, in place here over the next several months. These projects can support, roughly 60% debt with 40% as equity. In terms of financing our equity portion of that project finance, we will have a small amount of PGMs that'll show up in the concentrate and be payable. And we'd look to stream those. And again, with a 40-year resource life based on, in the resource update that we put out, that becomes a fairly non-dilutive source of financing as a PGM stream. So we're, targeting roughly, $50 to $100 million US for that stream, when we get to that point. And the other key piece of financing we'd be looking at right now is, again, in these offtake discussions we're having with the Asian battery suppliers, is to say, we'll provide you a quantity of nickel for a period of time, but you have to make a series of payments, one payment on signing, another payment post-feasibility, and a final payment basically covering off your proportion of the equity that's required to fund the project, a formula tied to that to be provided on a construction decision. And so, again, we think, those, based on the discussions we've had so far, we're pretty confident that we'll be able to get a fairly substantial chunk of capital, which will be treated as equity from a project debt finance perspective, and the requirement to do straight equity for the remainder of CNC should hopefully be pretty well minimized at that point in time. The other part is, realistically right now, there's very few new sources of nickel anywhere in North America, particularly anything of the scale that we've got. We're going to be pushing as hard and as fast as possible to get, this project. We've taken it for the fifth hole to a feasibility study in just over 3 years. But if our valuation isn't anywhere close to being fully valued by the second half of this year, I fully expect a major to come knocking on the door and take the project out, just because they're desperate to build out their battery metals business, and there's very few alternatives at this point in time.
And we did have a couple of questions related to that. What is ultimately, would you say, the goal at the end here? Do you want to become a mining company, or would you look to sell to a major? Again, any offer as a good steward of shareholder. If there's a substantial enough premium, you can't not take those offers to the shareholder base. So we will definitely do that. If and when those offers occur. In terms of building the project, our plan is to continue to push as hard and as fast as possible. We've got 2 members of our team. Christian Brousseau, he was part of the engineering construction team at Cisco. He led the engineering and construction at Detour. So he's already built 2 50,000 ton a day open pit mine mill operations in the Abitibi. And so, this one is right up his alley in terms of skill set, and then relationships with all the key suppliers that would use to build that operation. And then we brought someone that he worked with closely at Detour, a guy named Desmond Tranquilla, he basically is a civil engineer who splits his time between mining projects and actually civil engineering projects. And so, given the amount of soil and clay we need to move, there's a lot of civil engineering involved, and having him, with a deep experience in that part just makes it, that much more credible in terms of, having a team of people who can actually get this project built and into production. So. Great. And one question here, any update on potential TSX big board listing?
Yeah, so we're in discussions with the TSX. I think, once we get to the next, through the discussions with the potential partner, in the next chunk of capital on board, then we'd probably look to uplist at that point in time.
Great. Now, one question here: what's the strategy for drilling the other properties and funding that work? How much equity funding might you expect to require over the next 12 to 24 months?
Yeah. So what we've been doing so far is basically, again, is delineating the overall footprint, not drilling anywhere close enough to drill spacing to be able to put a resource in place. So if you look at what we did with Reed, those are all 400-meter step outs. And so it basically defines the outline of the mineralization, makes it very clear that there's a very large deposit that's there, but we're not spending a pile of dollars to get to, to add a 3rd billion ton of resource, at a point in time where we're really not getting fully valued for the first 2 billion tons that we've drilled off. So that'll be the way that we'll approach the rest of the deposits. You'll see some very wide space drilling, just as a way to sort of outline what's there, and we'll just drill as much as the market is willing to fund. And again, we're not going to do any significant dilution to raise money to drill off a 3rd billion ton or 4th billion ton of resource if the first 2 aren't being fully valued.
Absolutely. And following up on that, obviously you've accumulated a portfolio with quite a few targets. Have there been some that have kind of emerged as the most appealing? Reed, obviously, you've done a fair amount of drilling on.
Yeah, no, Reed's there was only 3 holes historically with no assays. So they just basically mentioned serpentinized dunite with some magnetite. And that's turned into an excellent deposit. There's a bunch of other deposits that we have way more information on, that we think are equally attractive, things like Midlothian. Deloro had some decent drilling in the drilling that we've done, and we basically drilled that out. Deloro is and the results, again, can line up with what was done historically. We think, again, based on the geophysics that we see, projects like McCool in the far east part of that land package look extremely appealing, and again, is larger than what we've got at Crawford. There was historical work done on the man targets, and there's 3 separate targets over a very large footprint. And again, those historical targets are pointing to, multiple ultramafic deposits in that area. And then, Bannockburn was half drilled off by Grid. So, we're quite confident there's a fairly substantial resource there with a decent amount that's north of 0.3%. Softman that we picked up from Glencore, as I said, there's a nice high grade pod that's there. And, we think there's a large low grade ultramafic sitting right next door. So, some of those bigger, higher grade ones are obviously sort of top of the list, but it'll be really interesting to sort of see, how many of these 20 plus end up emerging with the resource, given the very high hit rate that we've had so far to date.
Great. One question here, circling back kind of on the financing side of things, has there been any talks with provincial and federal governments on some help on funding the project?
Oh, we're in good discussions with, I've got a number of provincial ministers, in my contact base, who reply back when I text them relatively promptly. So we haven't talked about dollars and cents yet. As we get closer to feasibility study complete, those are the kind of discussions we have. And again, the government, pre the election really wasn't interested in talking very much. And again, there's a lot of moving pieces in terms of getting going with the new government in place. But, if you can see from a social media feed, the provincial minister of the environment came up to site, to see how things are going. And again, the provincial government's very, very keen for us to move forward. I can tell you the federal government and the ministry there has reached out as well too, in terms of finding out what they can do to help for the project. So I would say we've got very, very committed support, and it'll be a question of over the next year, taking that committed support and hopefully having some sizable checks attached to it as well.
Great. And looking again kind of at strategic investors in a way, but do you think
Yeah.
it makes sense for auto companies to consider buying battery metal suppliers? Have you been approached by any battery makers?
Battery makers, yes. Car companies, yes.
Okay. One question here in a different direction, more about the nickel market in general, but kind of current here. There has been a significant amount of media reports regarding the LME banning Russian nickel. How does that impact demand for nickel from other jurisdictions such as Canada?
Yeah, so the sad reality is that metal will always make it to market. So there are lots of trading companies that are less than scrupulous, and so you'll end up seeing nickel scrap exports from China and Turkey and some other countries all of a sudden, shoot up, and they'll just basically take Russian nickel, repackage it, do whatever they need to sort of sanitize it and ship it off as a Turkish product or a Russian product or Chinese, or sorry, not Russian, a Chinese product at that point in time. So that material will all still make it to market. What it does do, and this was part of the reason we saw that big squeeze in March, is with the war starting and nickel supply relatively tight, you had the entire supply chain decide, okay, you know what, I normally hold 1 week of inventory, maybe I'll hold 2 weeks. I hold 3 weeks, maybe I'll hold 4 or 5 weeks of inventory, just in case I'm not able to do that. And 1 week of inventory across the almost 3 million ton market is nearly 60,000 tons of nickel that basically just goes and disappears as being available from the market. And at that point in time, there's about 80,000 tons of nickel left on the LME. So, that 60,000 ton, has a real major impact on the market balance and market sentiment at that time. So, if there is a ban, that will again just entrench, some more stocking by people just to make sure they've got the nickel they need, to continue to operate.
Great. And I think going through the question, we had quite a few questions here submitted. A very keen audience today, which is great to see. One other question here, kind of circling back a little. We had mentioned early on how many drills are currently turning. We had another follow-up question on that. And how many holes with assay results in the lab might we expect to see?
Oh, yeah, no, we probably have 20 still pending, 20 to 25 pending from the regional properties. And then, again, it'd be nice if all the assays came through very nicely sequentially, hole by hole, but they tend to get, broken up among different holes. And so, yeah, we've got 20 to 25 regional properties that we're still waiting for assays from, and there's probably 40 to 50 Crawford holes still to come. So, but we expect to get those in, by the end of the month. We'll have a final resource that'll go into the feasibility study for year end, and we're hoping that we'll get the last of those assay results in by end of October, early November to be able to feed into that process.
Great. And yeah, I think that kind of circles back here with maybe a general closing question here, but just looking forward, what are major milestones and kind of news that we might expect from Canada Nickel here over the coming months?
Yeah, so you're going to see news flow on multiple fronts. You'll see sort of additional sub-milestones in the permitting process as we complete the various steps. You're going to see additional regional drilling results as we continue to step around the rest of these properties. You're going to see, some additional feasibility study discussion stuff as we come down to the feasibility study being released at year end. And again, pretty active on the partner process. And so hopefully we'll have some news flow over the next few months down that path front as well.
Great. And you know what, maybe one more question here. I should have not led with that one as the final one, but we did have a couple more follow-ups on deposit type and comparable deposits out there. Yeah. What would you say are the most comparable deposits? You had mentioned Western Australia, obviously, and we had folks mentioning things in British Columbia and elsewhere. What are your thoughts in terms of the comps out there?
Yeah. So Mount Keith, Yakabindi, Honeymoon Well. Mount Keith is the grandparent of these lower grade ultramafic nickel deposits. You've got the ultramafics in British Columbia. You know, there's a series of deposits out there with Giga, FPX, and some other ones that are at earlier stages by different companies. You can find the low grade ultramafics too in Scandinavia. You know, Kevitsa is a polymetallic version and more with sort of more sulfides in it than what we have. There are larger low grade deposits in Southern Africa, in Botswana and South Africa as well. They tend to have nickel, copper, and PGMs, so more byproducts associated with it, and they also tend to be much higher sulfur content, which unfortunately means instead of making the nice high grade concentrates that we make, they make kind of 8 to 10% nickel concentrates, which gets very expensive to process.
And maybe one final follow-up. We have a few more questions rolling in on the metallurgy side of things. Can you give us a little more insight on the metallurgical work that's being done, and any progress we might expect in terms of flotation and recoveries?
Yeah. So once we get this sort of the pilot plant that we've been working through, once those results are done, that'll be a good catalyst to get an update in terms of the metallurgy work going in the feasibility study. So, I would expect, towards the end of October or first part of November, you'll see an update on that front as well.
Great. All right. Well, I think that's all we have for questions today, or at least touches on the questions that people had. I'd like to, again, thank Mark Selby from Canada Nickel Company for presenting today. And thank you, everyone out there, for tuning in and for your questions today and for your interest. Just a reminder that Red Cloud Securities will be back tomorrow, Tuesday, October 5th, when our webinar series continues as we present ALX Resources at 2 p.m. Eastern Time. Have a great rest of your day.